Welcome to the Big Biz Show. Taking care of business. You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, now Captain Finance himself, Sully.
Wherever you're watching, wherever you are listening, we welcome you joyfully to another episode of the Big Biz Show. And as we like to say around these parts,
we Happy New Year. We said we were going to, okay.
I said we up in your biz.
Okay. Oh, did you say?
I did. It's on
Big Biz Show.
Yeah.
Getting up in your biz?
Getting up in your biz.
That's so lame. We have to fit into, so there's got to be something else.
Yeah. How about this one?
We may be slow, but we're stupid.
How about we just go, hey, like Fonzie.
Oh, my God.
Customer,
that is exactly what I expected.
There's so many Happy Days references on the show.
We did. We've had a couple last couple days.
Yeah.
What is the most famous Happy Days reference in the history of the world?
Jump the shark.
Boom. Nicely done. Ding, ding. Mary Burt Godwin and Mike Costa for 20.
Yes. Thank you.
What is the best episode of all?
Oh, it's got to be.
Oh, howdy doody.
That's exactly right.
I like your.
Exactly right. Hey, let's go right to New York City, where Howie Font sits in Manhattan in the Gramercy Park area. His address is, and his phone number is.
And he's never seen an episode of Happy Days in his life. I can.
Well, why
he's like 15 years old.
Happy was off the air 25 years when he was born. By the time.
He's even too young for Joni Loves Chachi.
Do you know what's funny is, Howie, you recognize Ron Howard's name from Imagine Entertainment, I'm assuming, more than Happy Days, correct? Or Andy Griffith's show, right?
The last two things you said, I have no idea.
Yeah,
there was something about jumping a shark.
Wait, do you know
jump
that
in
reference?
the water. I don't understand.
So Fonzie, in an episode where they just took Happy Days too far.
Too far.
He went water skiing, double water skiing, by the way, and jumped a shark. And it was just, and it's
very specific.
And
okay.
the term has several meanings.
Yes.
One meaning, which is incorrect, means that his timing was off. He didn't wait long enough.
Right.
Like you jumped into something too quickly. That's not really what it was.
No.
It actually means you went too far.
Yeah, the show just turned and it's not good anymore.
Yeah, I mean, it's
like
just
whenever you add a
jumped
little kid to a show.
Oliver to the Brady Bunch.
Yeah.
Killed it.
Jumped the show.
Anyway.
When you changed it.
Can I put how you doing in the running?
How you doing? Yeah, how you doing?
Okay.
In the front, yeah.
Okay.
Also,
it's a Big Biz Show. How you doing?
When they replaced Darren in Bewitched,
yep.
And I got to tell you, when Mike Farr went in to MASH, it wasn't the same as so when BJ was his name, which is part of the problem.
BJ Honeycutt
from KY, Kentucky, right? Any state that has KY as the initials, maybe want to change that one. Anyway,
hey Howie, have a large audience watching this program.
Hey Howie, I've used this term a lot, and now I no longer use it because I don't use things like pivot anymore or course correct, because when they start getting it overused, I'm out. Value trap is the next one for me.
Oh no,
because value trap was a really basically a stock that looks cheap at first when you look at it, but it's like it looks like it's on sale, but it's not really on sale. I thought it was a great thing, but so explain that, because it is something we need to look out for.
Yeah,
and it's kind of because there's a warning sign there, right?
I wanted to go into it, one, because you always say, there's lots of people watching the show. Sometimes we have a lot of new investors watching the show, and this is a thing that happens, especially in markets like this. The market's so high that if you haven't already bought in, it seems expensive to buy in. Maybe you're trying to look for smaller companies that you think could do a better job. Well, one of the things you might find when you're looking for that as a retail investor is a value trap. And that's a company that you say, okay, this is, this company was at 100, now it's at 60, but management's about to turn it around. It'll spike right back up to 100 and I'll make a lot of money. Amazing. Well, value traps are why Warren Buffett wasn't automatically obvious or popular. He found companies that were undervalued that were going to go back up. Value traps are these companies like the big example is something like Sears that just deteriorates and just slowly dies a long death. You don't want to do that. That's dead money. And you have to. Usually takes 5 years for you to figure out that this is not going to go back up and you've wasted all this time.
You brought up something really interesting, which I think we're going to go chase a rabbit here for a minute because it's a little bit different. You talked about when the market's so high or a stock is so high that you felt like you missed your chance. Yeah. And there's a great way, and Apple's a great example of this, because Apple was trading at one point at $60 a share, and all of a sudden, I missed my chance. There is, if I say, I know Howie knows this, if I say to you guys here in the studio or you at home, or if you're listening to us somewhere, Fibonacci sequence. Do you know what the Fibonacci sequence is?
I've heard of it.
Because of the
Fibonacci is a numerical sequence found everywhere in nature. And it's almost uncanny. Think about a seashell, okay? The shape of a seashell. Think about some flower patterns. And I will tell you the first few numbers of the Fibonacci sequence. 1, 2, 3, 7, 12, 20. You'd add the previous number to it, and if you make a geometric pattern, it's found in nature all the time. The Fibonacci numbers constantly repeat at 23.6%, 38.2%, 50%, 61.6%, and 78.6%. If you look at the distance between your arm and your foot, you'll find a Fibonacci number. If you look at the distance between us and the nearest planet, you'll find, they're everywhere. It's almost like it's not even random. If you look at a stock going to the moon, and you mark those points where 23.6% lower, 38.2% lower, 50% lower, 61.6% lower, and 78.6% lower, you can almost go, well, if it goes through this level, let's look for the next level. If it bounces off level, we'll get in there. Because typically, those are where the points where stocks jump back up. And it works almost every time. It's almost freaky. And I'm sure there's a much more complicated mathematical expression. But Howie, there is, I really love the way that you're giving people hope on, we're not overbought here. You just need to get in at the right time now, right? I mean, it's not a straight line, correct?
Yeah, you should be thinking about stocks, and this goes for the market as well as these value traps. When you put money into something, you should remember that the stock does not know the price that you paid for it. That's another big Warren Buffett quote. Just because you paid $1,000 for 10 shares doesn't mean the stock is actually worth that. Okay, you have to do a little homework, analyze what the company's worth. Usually whether or not it's growing or shrinking. And that's what's going to determine stock price, not the price that you pay.
Right. And Howie, the value trap part of this, by the way, is because it looks cheap, and it seems like a great time to get in, but it's actually a warning sign, correct? You got to look further than that, correct?
Yeah, and a lot of these companies are mature companies that pay dividends. So you're like, okay, wow, the stock was $100. They pay a $1 dividend. I'm getting a 1% dividend. Now the stock's dropped to $50. Now I'm getting a 2% dividend. I'm going to buy it there. That's amazing. But what happens is people see these high dividend payouts, and what they don't realize is the business is dying. That dividend's not going to be there forever. The dividend comes from the cash from the operations of the company. This is really big for retirees. If you own, utility stocks or Verizon or AT&T, they're kind of the typical dividend stocks. If you saw that dividend number go up, you'd be tempted to buy, but you have to ask yourself, why is the stock price dropping?
Howie, thanks, buddy. See you next time. Howie Font,
our market analyst here on the Big Biz Show. Always keep your pencil sharp when he and Sully start talking money.
He's got a great talk on inflation coming up tomorrow.
Love it.
On the program.
All right, we got a lot more coming your way as well. We're going to be talking a lot as the Big Biz Show rolls on. Do not go anywhere.
Loft 100 Studios, the Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the company's profile profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks if we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at sullyandgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at sec.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
Hey, is that a rescue plane?
We roll on live from the Loft 100 studios here in Southern California, wherever you're watching, wherever you're listening. Thank you so much for being along with us. Always along with us. A treat to hear every single show, the Day Trader Trio, right there on your screen, live and in person. Back here at the bar, not so sure about the live part, but in person, Costa, Maribor Godwin, and Sully.
There's a CEO that runs their company.
Yes.
There's there's three types of CEOs. CEO that runs the company, CEO that just looks at their stock, the CEO that does both.
Yeah.
And is mindful of shareholder value. He's that guy.
He is.
And I will tell you,
guy.
He and I text each other late at night, early in the morning, because we're both geeks about his company.
Yep.
And of course, I'm glad you guys had the same reactions. He's going to be in studio. We're going to give him, and if he brings his partner, the whole damn show if he comes in.
Yeah.
And then we're going to do some stuff beyond that. But is he with us today?
He is. Today? He also has the inside with McDonald's, and hopefully he'll bring a lot of that into studio as well. Lavell Malloy is the CEO and co-founder of Bragg House, their ticker symbol TVH, and this is, Sully is right, geeking out about what he is doing with Bragg House is insane. We welcome him back to the Big Biz Show. Lavell, how are you, my friend?
I'm doing well.
2 weeks. 2 weeks till we get to hang, brother. I can't wait.
I'm excited. I'm excited to meet you guys in person.
Yeah, it'll be good. Hey, listen, so I want to talk about Bitcoin, Ethereum, and Dogecoin. They're all forms of digital currency, and I think when people think of digital currency, they automatically say Bitcoin. Bitcoin has turned into an index, like Dow Jones, S&P, and NASDAQ, okay? It's an investment vehicle. I'm not sure we're ever going to get to the point. They've tried a number of times where you can actually use it as currency, but it's not mainstream enough. I think the two leading is Dogecoin number one and Ethereum number two. And what that means is those are different payment systems. Think of it as currency, okay? And I'm going to really be analogous by saying MasterCharge and Bank Americard, which are now called Visa and MasterCard, okay? At the time, when you didn't have a cash or a checkbook, okay, they came up with this thing called a charge card. Not a credit card, but a charge card. Charge card was a new payment method, and it wasn't so much that the consumers were waiting to adopt it, it was the banks that were waiting to adopt it because it came with some risk. If you spent $100 in a month, you had to pay off that $100 at the end of the month. Mm-hmm. But we're going to let you, if you need gas money on Tuesday and you didn't get paid till Friday, it was sort of that sort of thing to help out the consumer. It's turned into a real credit organization. It has become so far from that to where it's time to take the conversation seriously. And Lavell, that's why I want to talk about with you guys today, because I saw the Zacks small cap research stuff on you guys, and boy, I'll tell you what, you just went into another league. If you thought national TV was one thing, since then, I got calls from because I'm on Fox Business a lot, I'm on MSNBC a lot, to bring him with me on the air now. So it's working out. So can you take my sort of asset management treasury 101 MasterCharge versus Bank Americard analogy and show that between Dogecoin and Ethereum and how we're going to get there, because it comes down to us adopting it, right?
I think you're exactly right. It kind of starts first with what we've done successfully, which is community. And for what we've done in community is, we've said, hey, let's find a way that's going to make a better community and give them, things that they can really, really use. And obviously the ROI of that is ridiculous. So the same thing, let's give a better community. You identified very correctly, absolute flaw. It's $1 trillion inefficiency between the taxes that go on merchants. And what we decided to do is say, hey, let's do the same. Let's go on this amazing community, this 50 million Dogecoin holders and above, and let's make it a better way where they can interact. So our goal, and simple way, not to get too granular, is really building a blockchain rail that will pretty much eliminate that tax on it. And if you can save the merchants, which we did with the Gen Z, if you can save them, close to 70% of what they're spending, you're going to drastically change that market, make it more efficient, and then obviously for the shareholders, make it more very, very valuable and undercut what, again, like I said, with the Mastercards and the Visas is $1 trillion inefficiency.
Lavell, why are Gen Z, why are the Gen Zers out there, I mean, like moths to a flame, attracted to what you're doing?
I agree.
I think that's an excellent question. And I think the reason why is because and I tried to say it, we started with them. So when we looked at the community, we said, hey, what are the mechanics that they want to see and they want to get people engaged? When Learfield and McDonald's, I heard that when they came to us, and they said they wanted customers, simple. We said, well, what does our community want? And, if you flip that and you say, okay, great, let's make that an asset class as compared to a liability, because that's how the big businesses look at it. Mm-hmm. You can do amazing things. So it was really just starting with a community, giving this, that's the culture to capital model we did. And we're going to, again, that's the same thing that you guys alluded to. They want to be more efficient. They have credit cards, they have all these things. So they understand that. And I think the other question that, came on very early in the show when we talked about Venmo, we talked about all those things. These things make sense. The digital community, digital first, much more efficient. So really we're taking that already existing thing, giving them what they want, but simplifying it to a way that makes it much more efficient.
You guys are focusing going from, what do they say, digital engagement to digital ownership. Can you one more time explain that? Because I think this is brilliant. I think this is the real secret sauce here for you guys.
Yeah, I think, so all of this stuff is really, again, I look at it and think of making a better ecosystem, a better community. So we've always had the experience, whether you take Gen Z, they're excited, they get to experience things other people couldn't. Now we move into, having this kind of ownership, and the ownership is really, and we already have, this is all public information. We already have the clients, the major sports, to increase engagement, give them these fractional ownership pieces of this community. And when you have that, you're like, wow, now I'm engaged. So it really is the next evolution, and I believe it's what we're going to see in the next evolution of fan appreciation.
I think you have tons of fan appreciation here, buddy. And
oh my God,
you better be careful for when you come out, because we're going to keep you busy.
Absolutely, double quarter pounder with cheese, large fries. Thank you, Lavell Malloy, CEO, co-founder, Bragg House, ticker symbol TBH, website bragghouse.com. Yeah, we got to get here. In over 175 countries and all the ships at sea, thank you for listening. More importantly, thank you to the brave men and women of the United States Armed Forces listening on American Forces Radio Network. Thanks for listening to the Day Trader Trio. Always great, always awesome. Of course, back here at the bar as the Big Biz Show rolls on, live from the Loft 100 studios. It is Costa. I think it's Mary Bert Godwin. I don't even know her anymore. And of course, Sully. I mean, we were talking a little music there, Saul, and she didn't know who the Drifters.
Songs from 1925.
The Drifters were big, like in the 50s and 60s.
Okay, fine, whatever. 55, 65.
Vivos Therapeutics, ticker symbols VVOS. I give you my good friend Kirk Huntsman. How you feeling, pal? I understand you were out under the weather there for a minute, but look at he looks as spry.
He always looks great.
Yeah, I'm back from the grave here. Out here at J.P. Morgan Healthcare Conference in San Francisco, and it's an amazing time, amazing situation for our company. 2026 is shaping up to be a really good breakthrough year for us. So
hey, Kurt, excited. We're in more markets now, and in a couple other networks that we were not before. Can you explain for the people who've never heard your story before, real quickly, about what Vivos Therapeutics does and what you guys have developed?
Yeah, so Vivos Therapeutics has a novel oral appliance therapy that actually has the ability to non-surgically remodel the human airway. And what we do is we apply this technology to patients who have obstructive sleep apnea. And for the last 45 years, the go-to solution for this has been a CPAP machine, which is, as anyone knows who's had that diagnosis and that prescription, nobody wants a CPAP. Nobody wants to have a big, Darth Vader mask on their face and whatnot. So the treatment of obstructive sleep apnea has always been very, very sketchy. And it's something that nobody really wants, but many people have to rely on it to stay alive, because sleep apnea affects so many aspects of our health and wellness. So along comes Vivos, and we have this ability within 9 to 12 months to completely remodel an airway and give people a big set of, a big new set of pipes to breathe through. And we're taking it to market, and we're just, we finally found a way to really monetize this by affiliating with sleep centers. And that's really been the key breakthrough that I think is really going to show up here in 2026. Our acquisition of the sleep centers down in Las Vegas is proving to be even better than we ever dreamed. And so we're just so excited to bring that to more sleep centers. We announced an opening in Detroit a couple weeks ago. And so we're just, as we round the corner here and head into 2026, this is a hugely pivotal year for Vivos, and very, very strong.
The thing that I've always noticed about this product is that it sells itself once people get it and understand it, because it's not that hard of a sell. This is just about getting the word out, is it not? It's as simple as that.
Really is. It really is. I'll tell you something that's really happened over the last 6 months. You guys remember when we brought Dr. Bahara Smiley into the studio there, had her on the program, and she is on Instagram as the airway queen. So if you go to Instagram and you check
I'm
the airway
so
queen,
not surprised that is her name.
Does that surprise anybody here? So you go to her. So her Instagram account has just blown up. We have patients literally flying in from all over the world to be treated by her. They're in Colorado. So it's just an amazing thing. But there's a lot of information. There's a lot of, she's put a lot of time and effort into sort of building out her social media presence. And there's a lot of information there. So the airway queen, there's a gal down in Houston, the airway dentist. There's several different Vivos providers that are out there on social media. We'll be rolling out a new website here in the next few weeks that'll have a lot of new information on it. We're the only oral devices in the world that are cleared by the FDA to treat severe sleep apnea. So, for kids and adults. So this is a lot of people don't realize children have this. 10 million children in the United States have this condition. So lots of opportunity for this company. Lots of opportunity. I think our valuation is very, very understated right now. Lots of opportunity for investors, I think, at this time. And so it's a great time to really take a look at this company and come in.
How are insurance companies with this? Are they on board and willing to cover this? Because this seems like it's going to save so many lives and help people not need.
And talk about lost productivity in the workplace.
Right. This is like helping people get healthier. So what's that journey like with insurance companies?
That journey is a little bit of a road to traverse here. We have hired some of the best people in the industry to help us get in front of the payers and make this case. The payers today will pay about half of the cost of this treatment. It still leaves the patient having to come out of pocket and pay money. So what we're trying to do is get the payers to cover all of it and to get more payers aware of what we're able to do, because their patients want to be well. They don't want to be in a CPAP. They don't want to have this condition with all the comorbidities associated with it. And so they want to be well, and we just need to get the payers to be aware. So we've got the right people now opening the doors. We're opening the doors into the military, into the government, into the halls of Congress and Medicare. Now we have Medicare clearance. So lots of opportunity, I think, this year to expand that coverage and get more payers paying more towards the treatment here. So it's happening.
Kirk, what is the, before I let you out of here today, the acquisition strategy or the expansion strategy? You got Vegas, got Detroit and beyond. Is that something that is now a key sort of initiative for you, not just the therapy now, but obviously getting these more sales points like this across the country? Is that going to be front and center going forward here?
Yeah, so that's exactly right. What happened is that when word leaked out that we had bought these groups, this group in Nevada, we had cardiology groups, of all things. Cardiologists called us and said, hey, we're cardiologists, we're not sleep specialists, but 90% of our cardiology patients have sleep apnea.
Yep.
So what we need is somebody to come in and do the testing and do the treatment for us. Will you collaborate with us on this, and can we work together? And so I'm in the process right now. That's one of my main reasons for being out here at the JP Morgan Healthcare Conference. Is I'm hooking up with strategic partners that will allow us to get into these cardiology groups and take care of all their sleep patients. We got one cardiology group with 20,000 patients a month, another one with 30,000 patients a month. It's amazing to me that these patients have gone in so long without having the cardiologists address their sleep apnea, but that's changing now.
You know, now that you brought up Bahar, I got to extend the invitation on our nickel to give you a whole hour on the show again. If you can get out here, we need to get you guys back out here sooner than later. I mean, honestly, we need an update.
For those who've never experienced the Bahar,
airway.
But also, you had a pediatric surgeon here or a pediatric doctor here. You had a lot of, you had a cardiologist here. I think we need to do that again. Kirk, thank you so much, man. Can't wait to get you back in studio here. And best of luck at JP Morgan. I know you got lots of meetings lined up. So keep them going, pal.
Thank you so much.
Kirk Huntsman, CEO of Vivos Therapeutics, Vivos, the ticker symbol website, VIVOS.com. If you got sleep apnea, just go to the website, please. I'm living proof. It absolutely works.
He needs a gas, sort of a gas X sort of product, doesn't he, Mike?
All right, keep it here. Let's try to cover the Big Biz Show. We're back after this.
Loft 100 Studios, The Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks if we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at sullyandgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at sec.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
Hey, is that a rescue plane?
Big Biz Show continues. This is how we do it. Thank you. No rider. That is the Day Trader Trio.
This is better than Spanish eyes.
Nothing is better than Spanish eyes.
Here inside the Loft 100 Studios. And back at the bar as the Big Biz Show continues. It's Costa. It is Mary Bert Godwin. Oh, getting her groove on, getting jiggy with it, as the kids say. And Sully.
As the kids say, those crazy college kids.
Oh, that's awesome.
Trey Wasser is the CEO director of DryDen Gold Corp. Their ticker symbol is DRYGF. Okay, Trey was a client and a contributor here when he was with Ely Gold Royalties back in 2010 through 2021. He was literally, he took this $6 million exploration company and turned it into a $300 million royalty company. He's one of my favorite people in the world because he continued to come on the air with us even after he was gone from the show, or gone from the company. And do you ever hear me talk about money flow versus inflation?
Sure.
And I said, go back to 1940, every time we pump in this much money into the system, inflation follows. He's the man who taught me that. He's the man who drew that chart that we use all the time, and he is with us today. I'm happy to hear he's back in the gold business. I thought you were supposed to be out of this business, man. Look at you. And he looks better. He's lost weight. He's got more hair. Damn. He's like it's like my long lost father.
Yeah. Well, it's those two letters and one number, Sully. GLP-1.
GLP-1. There you go. That's right. Hey. Last time we spoke just before Ely sold in 2021, gold was $2,000 an ounce. Now it's $4,600. And if you try to get physical gold, it's more like $5,400 if you try to buy it, if you can get a hold of it. Talk about what's going on in the precious metal markets. And you and I had this original conversation because gold went out of favor. Then gold went in favor, gold went out of favor, and now it's really in favor. Is it now finally something that people are paying attention to? Because I think there's been a segment of the audience that's been paying attention to it, but not everybody. Talk about that.
Well, look, Sully, you didn't go through my whole bio, but I spent about 22 years on Wall Street as a bond salesman and fixed income specialist. And as I look back now, I realized what I was in the middle of, or the heyday of, was a secular bull market in bonds that lasted 40 years. And it really got fun towards the end. Of course, I wasn't in the business anymore as they cascaded. How did that end, Sully? With zero or negative interest.
That's exactly right.
Yeah.
And every time that happens, then we pay for it eventually as consumers.
Absolutely. So that's what's going on in gold now. I realize it's another secular bull market in precious metals. And, it has to do with money flows. It has to do with inflation. It has to do with interest rates, all of those cyclical things that have always moved the price of gold up and down. But we now have these secular long-term structural forces that are happening in the market and really changing things. It's de-dollarization. That's a big theme now. And of course, all of the U.S. debt, which really accelerated during COVID. And then some new things that really don't get much attention. And that is that this last summer, gold was made a tier 1 asset by the Basel III that everybody, the institutions have to pay attention to. That means they can use that on their balance sheets like they do treasury bills. And then, of course, not long after that, the banks started getting long, covering their shorts and getting long gold and silver. And then Morgan Stanley comes out last fall and recommends that the old 60-40 stocks and bonds should now be 60 stocks, 20 bonds, and 20 gold.
Which is insane if you think about asset mixes going back 100 years. You'd never see that before. It was in the 2% to 5% range forever and ever and ever.
Those are the kind of things that define a secular market. They're things that major changes. And of course, we now have it also with technology coming in and the tokenization. I know you guys cover a lot of that on your show. So a lot of technical changes. And then, of course, the crazy stuff that's going on geopolitically.
Trey Wasser is the CEO and director of DryDen Gold Corp, ticker symbol DRY as in yellow gold, DRYGF. Trey, put your analyst hat back on and tell our audience, me, how I should evaluate junior mining companies.
Yeah, great question. Look, with junior mining companies, I compare it, especially when I'm marketing in the U.S., to the biotech industry. I don't know which ones to buy. There's hundreds of them, and they all seem to have the next cure for cancer. So, what you really look at is management. Has management done this before in the biotech.
Yeah, this is the bet on the jockey, not the horse. Especially in this business, you got to bet on the. I mean, you do, and I will tell you. And as you mentioned before, going from analyst to miner to gold royalty operator, you kind of covered the spectrum there, didn't you?
Yeah. Well, that look. It's management that has been there. The property, that's obviously very important too. But the other thing is the shareholders. You can look at, and again, I compare it to the biotech. Are the big players in the industry invested in this stock? And most importantly, are there big players, other big biotech companies and pharmaceutical companies that are investing in the company? So in our case at DryDen, our two largest shareholders are Alamos Gold and Centerra Gold. And it's because they appreciate not just the team, I mean the property, but the team as well.
Yeah, I would say in reverse order, my friend. You're going to hear from him again. Whether he likes it or not, he's coming back next week. Thanks.
Bet on the guy with
so great
white
to see you
hair.
again, bud.
Trey Wassler, CEO, Director, DryDen Gold Corp, ticker symbol, DRYGF, website, DryDenGold.com.
I'm going to continue pushing to have he and I do a show together. I swear, he is the most interesting guy when it comes.
We need him as our gold expert.
Well, he is. He's done. Done deal.
We are experts too, and there's a lot more expertise coming your way. Don't go anywhere. Live inside the Loft 100 studios here in Southern California. You may not be in Southern California, you may be anywhere in the world watching or listening. We always appreciate you being along for the show. Day Trader Trio, always along for the show as well. Of course, back here at the bar, it is Costa, it is Maribert Godwin, and it is Sully with a very special guest. We love when this guy's in studio.
Dan Negroni, the author of Chasing Relevance, and now the author of
Find Your Work First, Gen Z's Playbook to Thrive at Work with AI with Humans with Purpose. Dan Negroni and Michelle Duvall with Coach Marley.
Is your school year started yet?
No, it starts next week.
Professor
next Tuesday, week from today.
So what are you teaching this year? Anything new?
Yeah, I am teaching something new called Business Professions, which is very much along the lines of this book, which is teaching young Gen Zs how to articulate their value and enter the workforce with all the tools. And now there's a playbook.
Super cool. Is it easier now for the Gen Zs to get into the workplace versus the millennials when it was really like we had a whole different class of people going to the old school, and now
That's such a great question. I really think it's a great question. I think millennials actually had it easier because I think the world was different and easier. It wasn't as complex. We didn't have all the technology, and the chances of them succeeding was a lot greater.
No kidding.
So, if you look at it, like I have a 33-year-old son and a 24-year-old son, and the difference is radical. Really? In terms of opportunities. The 34-year-old got right in there under the weather, under the line, or just to figure out how to be successful, to afford his first house, all those things.
Is this an economic thing in your mind?
I think it's an economic thing. I think it's a technology thing. An economy, right? So AI is impacting, jobs. I think it's really tough for Gen Zs out there now.
So on that subject, though, the person that can slay that dragon of AI, just like the person that could master the internet back when in 1990, when the first .com bubble, or whenever it was, 1998 actually, the first .com bubble burst. Don't you think it's an opportunity here for guys like your son who's...
You know me, I think everything's an opportunity. Sure. However, I think it's a little bit more difficult for them. What do you think the reason is? It's interesting to ask you guys.
Well, I always use the analogy of the music business. When there were record stores, and there were record labels, and there was only one way to make yourself famous in music or get your music heard, that's to be on the radio. Okay, so there's only a finite amount of ways to get on the radio. You had to get a record label talks to the radio station plays your music. Now it's so much more democratic. Anybody can release a song on any platform tomorrow. They can promote their song. The problem is there's so much traffic now. It's tough to be seen. So
what do you think that does to them? Because I love that comment. I think it's super.
I think that's the analogy I can think of about what's happening.
I love the analogy. There's something that happens to them when it's that competitive.
Anonymity.
First of all, anonymity and lack of confidence.
Yeah, right. Yep.
Because it's just so hard to stand out, and everyone knows or can see what everyone else is doing, and so the whole world is there. So all they are is confused, and what about me, and do I have the skills? And we haven't upped the teaching of them anything. Right. We've just given them a device to be able to do this with.
Haven't we also, though, the older generations poison the well a little bit for them? I mean, coming in
terms of what?
Gen Zers. Oh, you don't want to hire Gen Z. They're going to be, they're like, oh my God, they can't.
So I think that's equal. We've always been like that. Every generation since the beginning of time.
That damn rock and roll music.
Yeah. Socrates and Plato, right? Same thing. And there's quotes of that kids don't exercise, they don't have manners, they eat with their mouth full from 4,000 years ago. So I think we've always been like that. However, I do think the way the world is now with technology, Australia now banning technology until you're 16, it is I am so addicted to my phone. Mm-hmm. Sure. It is so addictive.
Someone said the other day, I was talking to a young parent, one of my daughter's friends, saying, no screen time. We're not going to have any screen time in the house until they're 12 years old. I'm thinking to myself, okay, I understand why, but doesn't that put that child at a disadvantage eventually? Because wars will be fought from Las Vegas, Nevada, on the other side of the earth using video game technology.
Yeah, it's the way of the world.
It's almost.
I don't think it's no screen time. It's limited screen time.
Quality screen time.
Right, and quality without giving them a device to have in their bedroom late at night while no one's watching.
Can I tell you, my daughter gave my ex-wife, who's very close friends of mine, something called a brick. Have you heard of a brick?
Yeah.
It's fantastic. Now, I don't have a problem with social media. Right? You put your phone next to the brick and you pick the apps that you don't want to be on. And if your phone is away from that brick, you cannot get on Facebook no matter what. You cannot get on Instagram. I'm never going to put Instacart on there because I need to be on Instacart. But the point is, I think I think you're right. The right screen time, the quality time, and not absence of screen time, but it's got to be the right screen time.
And they're so concerned about getting better. It's interesting. We had all these great guests with my last class last semester. We brought them here, like 60 of them. Yeah. We had this great real experience with all these great guests, general counsels, DAs, mediators. And at the end of class, I said, what more do you need from me? And they said, we need to talk to students or kids, people that are just a few years ahead of our career, because we need a roadmap. And all you people, like taking them here and meeting you guys, or taking them to meet a DA or a general counsel, that's so far from their reality. And they want to see, what do I have to do?
They want the on-ramp.
Years from now, because there's so much out there that they can't focus on it. And it was a brilliant day I brought my son and some other friends' sons.
They were a few years ahead.
And it was, first of all, the experience for the guest speakers, and then the experience for the class. It was goosebump worthy. It was so. We should do that here sometime. Yeah. Super cool.
I would love to do that. Yeah. I think what's interesting here, for what you're talking about, because you have a playbook now.
Yeah.
Really and that's what Find Your Workverse is about. Talk about the book for a minute.
Yeah, the book is really 3 parts. So it's really understand what the workplace is now, find what type of workplace you want to be in, and then unlock your own potential to apply it to. So it's 3 major parts. It's a playbook. It uses Marley's motivation analysis, and it really allows them to understand themselves so in kind of the private life in front of their computer, so they can go to the world and have a little bit more confidence.
Let's go back to the assembly line, or let's go back to interchangeable parts on an auto machine, where we were so worried that millions of jobs we lost. All of a sudden, the jobs.
Great questions today. Hard questions.
But do you think? You said that we shouldn't be afraid of AI. We should be embracing it, because if you think of it in the right context, right?
Yeah, it's AI plus human equals superhuman. And so again, as you saw when we had that very young lady here who said garbage in, garbage out.
Yeah, right.
And it's really teaching them how to think, which is the big problem. Yeah. And how to think is how to use AI for their benefit instead of just relying on it as a crutch. And if we can do that with all of them, and we teach them from a very early age how to make it your friend, I think the possibilities in the world are super optimistic.
We need monthly events with you. We need to do one out there at the campus and bring more people in here.
Oh, going to the campus would be a hoot.
Well, no, Mike, we're there to work. Okay.
Sorry.
You go in the back door, out, walking through the cafeteria. Dan Negroni.
Dan Negroni, speaker, CEO, coach, consultant, chief launch officer, professor, granddad, author, Find Your Workforce, Gen Z's Playbook to Thrive at Work with AI with Humans with Purpose. Unfortunately, that is going to do it for this edition of the Big Biz Show. We brought as much purpose as we could. We will see you next time. Thanks for being with us.